Are we starting or like what's going on here?
We're playing Gamba.
Uh,
What are we doing?
sure, I'm just chilling, I guess.
Are we waiting for people?
I suppose.
All right.
Okay.
Yeah, just started, Spiky.
Uh, should I start? So I'm just like teaching the basics, I guess, like in terms of music. I mean, it's my like first time teaching, so please bear with me. Uh, let's see. I mean, like everyone here like has like already like a basic grasp of just options in general, right? Like can we open like the event VC so I can see chat as well? Oh wait, there's already chat. Fuck. But damn, there's no one here like uh like everyone here has like the just the basic grasp of like options, or like is it's just like everyone here like new? Like
Yeah, just read the plan, Spiky.
it sounds good. I guess like comprehensive options trading curriculum. So I guess this class, like course overview and objectives. Course is meant to be or supposed to provide a start to finish education and options. Just like beginning with the foundational like building blocks, like just like the very basics, like rights and obligations of like calls and puts, strike price, expiration, and like moneyness. It's like just a very like pure like basics. You guys can build off of that, and progressively introduces like the tools and strategies used by more so like professional traders. Students will learn how the options premium are constructed, how risks are quantified through the Greeks, how to interpret options chains, and how to apply technical and fundamental analysis. The curriculum also covers risk management, regulatory considerations, and advanced strategies, ensuring participants can confidently evaluate price and trade options across market conditions. Like this is just like for me, but in my opinion, like having like a good risk management plan and also psychology like is way more important than the strategy itself. Like you can know the very basics and you can still very much be profitable, like without like knowing like much. Like just keeping it like mostly simple in my opinion. So just on to number one, like introduction to options. Like what is an option? By definition, an option is a contract giving the buyer the right, but not the obligation to buy, I guess, in this case, like call or sell would be a put, more so shorting if you're into futures, an underlying asset at the predetermined strike price on or before a specific expiration date. Each standard equity option represents 100 shares of the underlying security. So between calls and puts, a call option gains the right to purchase the underlying asset, and a put option grants the right to sell it. So basically, putting it simply, like if you want to bet on a stock going up in this case, you would want a call, and if you want to bet on the stock going down and make money, you buy a put. And moving on to, I guess, selling options in this case, which we don't really usually do, but the option seller receives a premium and is obligated to fulfill the contract if exercised. And between American and European styles, American options can be exercised anytime before expiration, whereas if you were to play like a European style option, like they can only be exercised on the expiration date itself. So putting it simply, like what we usually do is play more American-styled options. So you guys are more familiar with that. And going on to strike price and moneyness. The strike price determines the level at which the option can be exercised. Options that are in the money when exercising would be profitable. I guess in this case, like stock price above like the strike for calls, below for puts. And options out of the money, like OTM in this case, when exercising would result in a loss at expiration date, and at the money when the strike is approximately equal to the current price. Now for the contract size, like equity options typically control 100 shares, and index options have different multipliers. For option premiums, the price paid for an option consists of intrinsic value, immediate exercise value, plus extrinsic value, I guess in this case, time value, which would be theta, but I'll also get into that later, which is influenced by time to expiration, volatility, and interest rates, which how many people are just agreeing on like a price. Moving on to rights and obligations, options buyers pay a premium for the right to exercise, I guess buying the option in this case. Their loss is limited to the premium paid, while their upside can be substantial for calls or significant for puts. Option sellers, writers, receive the premium and take on the obligation. They face potentially unlimited risk on uncovered short calls and large risk on short puts, but limited risk when trades are covered, etc. In this case, selling calls on stock already owned. Moving on to types of underlying assets. Options can be written on equities, exchange fund traded funds, parentheses like ETFs, like indices, commodities, like currencies, even volatility products. Like for example, like the VIX indicator, which measures like people's fears. You can even bet on that. Each product has unique features, whether physical versus cash settlement, different expiration cycles, and familiarity with the underlying is essential for trading each or per option. Moving on to key option concepts, we have strike price and moneyness. Now for the strike price, which is at the fixed price at which the option holder can buy either a call or a put on the asset they want to, I guess, like bet on in this case, or purchase, since you're not directly owning the stock, buying the option. Whether the option is in the money, ITM, or at the money, or more known as ATM, or out of the money, which is OTM, which is more like lottery-ish plays, or just more risk in general as it goes on. For ITM options, they have intrinsic value, while out of the money options consist of entirely extrinsic time value, since they want to be in the money and the value would rely on delta, or I mean theta, just the time in this case. No, intrinsic, oh god, sorry. Intrinsic value versus extrinsic value. For the I would just say like internal value, the profit from immediate exercise if you want to execute the option. For a call option, this equals the underlying price minus the strike price. For a put, it equals the strike price minus the underlying price. For, I guess, external like value, which would mostly be time, the portion of the option premium exceeding intrinsic value arising from time to expiration, implied volatility and interest rates, which would mostly, in this case, like contain on more external like link factors. For moving on to option premium determinants, and options premiums mostly the key like influences would be the factor underlying price, the strike price, the time to expiration, the implied volatility, and the risk-free interest rate. Now, moving back to the underlying price, higher prices usually increase call premiums and decrease put premiums. Hard to process. Yeah, that's my bad. Let me... Hold on. I'm going to like make a slideshow. Like honestly, I'm better at like if you guys just like have any questions, like you guys don't understand, I'm way better at, I guess, like giving advice on the more technical side. Like if you have any questions, you can just ping me in chat. Since I'm just going over the basics, so here's some strike price. A strike price is a certain, I guess, number you'd want to play since ITM strikes cost more due to greater internal value. Longer time increases like external value because of the chance of a favorable move is greater. So, for example, like a certain price can be influenced. You might see like for some, how should I put it? Like you might see like way cheaper options, like just like depending on the stock is moving, which is usually or just mostly judged by of how like what people think like where or how price is going to move, which is also like I also pair it like as confluence like when I trade futures using options flow to like using I guess like options flow and just like the GEX like just to better like pair just like have my trade be like higher probability. So moving on to time to expiration, longer time increases external value because the chance of oh sorry I already said that. Now moving on to implied volatility, this is where like it gets like a little more tricky to understand, but usually if you see like a higher IV percentage, it would mean like people are expecting like that price, like expecting like a move in that price, and in a way it's already priced in depending on the just like the percentage like on the IV, so it could limit you from just like depending on the IV, like even if the move goes up, like you wouldn't make it like as much since the option call would already be like overpriced or in this case like priced in because like just a lot of people are already like expecting that move to more so like move, so you wouldn't really gain much whether playing like a call that's more like I guess unexpected for most. Now moving on to risk-free interest rates, I'd say usually higher rates slightly increase call values and decrease put values for Rio in this case, which is part of the Greeks as well. For yeah, and on the side here, like impact is small for short-term options, whether it be like just like not many days till like expiration. I guess more of a high risk, high reward trade in that case. And looking at factor dividends and the effect on premium, expected dividends lower call premiums and raise put premiums because the stock prices typically drop by the dividend amount on the ex-dividend date. For that, for me personally, I don't really take this into account. It's not as important as these other factors, but it's also a good thing to like know or keep in mind. For implied volatility, I guess IV, which is one of the more important like aspects. Implied volatility reflects like the market's like expectations of the underlying future price, like variability. As I said before, higher IV or implied volatility in this case tends to lead to higher option premiums. And IV typically rises in bearish markets and declines in bullish markets. Usually I guess putting it simply, like the VIX index, which I'm sure like most of you are familiar with, it measures just the fear, like higher VIX means there is more fear, there's like this, there's just like less stability, like yeah, here like the S&P 500 and the option IV, it's like just like the uncertainty of how the market is going to move, the higher the VIX is, and vice versa, the lower the VIX, the more, I guess, stable like things like tend to be. Looking at historical and implied volatility here, since for historical volatility, it measures the actual past price variability of the underlying, whereas the implied volatility is more forward-looking and derived from the option prices. So traders usually compare the two to guess like determine more accurately, like calculate like risk, just being in the trade, taking the trade, using that like as like one of the confluences to go and take that trade. Mostly in this case, like seeing if it's like expensive for the price, or the expected like move up or down, or like pretty relatively cheap, like seeing like potential like mispricing in the market. Now onto the options Greeks, which is like you'd be seeing these quite a bit, and having a more broad and like wide understanding of the option Greeks, like knowing what each like factor does, will very like greatly help you in the long run. Like you would have a more wide picture, you would have more confidence depending on like certain like measurements or just like numbers that you would see in this case. And it's true that you don't really know it, but for me, I do like heavily recommend just like studying like the option Greeks, like just like more in depth, so you'd have always like just that edge, like having a better understanding. So for first one, like delta, it measures the option price for $1 change in the underlying. So looking at key facts, we see call deltas range from 0 to 1, whereas put deltas would be in the opposite direction. So it would be measured from 0 to -1 in that case. And it also does, in a way, approximate more bluntly the probability that the option would finish or close in the money on expiration. Mm, and although like this like approximates this, I mainly use that to just like see what like the entire, just like the general like just like the traders like think like just what like they think like fair like value is, like what they expect. Like I wouldn't use this myself to like determine price, but I'd rather use it to like see like if I could use it to my advantage. Like do I have like a potential like mispricing? Moving on to gamma, since gamma is the rate of change in delta in this case, plays into above. It moves as the underlying moves, so gamma would usually be higher for at the money options. Usually helps like assess how quickly delta will change. Just like kind of a more base, kind of more like solidified feel.
Oh, hey,
Uh,
sorry. I just wanted to ask, are you gonna be sending the slideshow after the lecture?
slideshow? Like you mean like this PDF
Yeah,
or?
Yeah, like this PDF.
Yeah, like I should be able to, since like for me, I'm better at just like more helping you guys on the more like I guess like more just niche aspects.
Yeah, if you guys have like questions about what he said, you can just ask it. It's a lot
Yeah, I'm like
easier
way
to
better at that. Like just like
respond to questions than it is to just talk.
it's like having a presentation. I mean, like I'll take a break now, like just a small break to like see if anyone has any questions. You can ask in chat or like just talk in VC.
Is today's class mainly just going to be like the bare bone basics of options?
I suppose like the bare bone like basics of options, but once we I guess get into like the more like it's more the part just the more niche like quote unquote like difficult parts, like I'll be able to like thrive and like help you guys way more in that. So for
Yeah.
now we're just going over like the very basics, just for like the people that are just like pretty like new to this.
Yeah. A lot of my questions are mainly based on the strategy and how it all works. So,
Yeah, like you can always like ask me like even like in chat or personally, like in DMs or just like advice or uh just in general. Like I'm able to just help at that like way more. Also in my opinion, like having just technical analysis like knowledge, just futures like knowledge. Since I came back to options pretty recently, actually coming back from futures, like having that like extended knowledge is very, very like useful as well. Is there an example of how you go through the whole process of analyzing buying and selling? For me, options nowadays, I mainly do calls and puts on, I guess like SPY and QQQ, as you guys know, which is pretty similar for me in options, but I like the convexity more on options, way more than futures, as it tends to be more linear. So I'm hoping to apply mostly just my futures knowledge, like translating that for you guys to options so you guys can very just like apply it or just like study it, know how it works, like not using it as just like a strategy, but like studying it, like trying to like understand the concept itself. Yeah, like the Greeks in play. I mean, if you see here, it's like the best example to get at this. Let me try get an example. Give me 1 second. Option. Let's go on QQQ actually, since I pretty recently played that. Uh, okay, so since what like I like to do, since you'd say it's like zero like DT calls, which would be 0 days to expiration on like QQQ and SPY. Um, like the mispricing on just like playing in like the Greeks is not as important compared to like other potential like stock like options you might be playing or like want to play. So uh, it's also I guess like driven by volatility and liquidity. With liquidity, like I suppose, just yes, there is mispricing, but seeing just like for SPY and QQ and QQ in this case, like the option Greeks, like they tend to be more, I guess, well priced in or quote unquote accurate compared to, I guess you would say like some random like stock option, you'd like put like a lotto in for like a few pennies.
Oh yeah, I also have a question. So like, there's all like this strategy and all that, but is there like any way to actually predict like, can this strategy be used if like let's say a market crash, right? Like like what happened on Friday in the afternoon, and then like so and then
Thursday,
like
afternoon.
yeah, and then like Saucy made like 2,700 percent off that option.
Yes, actually, like
Yeah,
I'll show
is there
my
like
analysis
actually
for
like
that.
ways? Yeah, is there like actually like analysis like that can actually like predict that? Because like, is that just like something that just happened to happen, or is it just like
And it's all about probability in my case. Let me screen share my trading view so I can better like give examples for you guys.
Saucy
You can
caught
run
that
entry here.
2,700% because of his Fibonacci.
No, yeah,
It
sorry, I was just
But
looking
if
at
we see
the
here, like going back to last week, if we scale down to the 1 minute, like I guess like I'll like explain like my entry as well, since I also did like entry all the way from up here, although my TP was like the previous data wick. So I did not get like as impressive of like a TP compared to I guess like that 2000X play. Since like
Wait, Saucy, I have a
what's up?
question.
Yeah.
What was your stop loss, bro?
For which
Stop
one?
loss was at previous
What is
highs,
it?
so I got it at like the top of that. So
So like how much were you down when you were holding?
at first I got in at market open and I was down like 30% or 25%. I think it was 22% actually, and then
Oh,
I had a
that's
re-entry.
Like uh you just like saw like I mean it was like very bearish, but like you're just like targeting like, those like data wick lows and just like lower draws on liquidity, like just for different like
yeah.
sessions, like down here, down here, and down here. And if you didn't like analyze like the market like previously, like in past few days, like you'd see like it would just leave and just run like key draws, like very strong draws on like liquidity, just like leaving it, like seemingly making no sense. But just like for like my way of thinking, this is just like my theory, like only like happens all the way like back like I guess like around here, like when you're like the few days like just like before like the Nvidia earnings, I suppose. Like I was just like just checking my bookmap order flow, just seeing, and I saw like very like strange like movement or just like activity like showing on my bookmap at like pre-market like right before like New York open, and like seeing how price moved that day, like it was very odd. It was trying to like it was moving more like inefficiently, in my opinion. Like just I guess like and putting it simply, like I guess losing money on purpose in a way, trying to like if as if there was like a bigger goal, like as if there was like a bigger goal to achieve, like knowing that like purposely like pricing it. I mean like right around here, like we just like went up like what like 400 points and all the way down for like seemingly no reason, which like my theory is that like they're just trying to like price it in so like when Nvidia like earnings like drops, like it wouldn't be like too crazy. And just all the way back here, like I think where was it? Scale that down to the 5 minute. Like here, like looking at this, like there are very like a lot of like just key draws like down here, here. Like I was still expecting longs, but since like market open, I just like wanted to expect like price to just like be more drawn to like a certain like key like liquidity, since in my opinion like the market like mostly like hunts liquidity, like it seeks for the most like efficient like way to move. So that being like said, like knowing that like on the just like on the day like after the Nvidia earnings, like price just like went fucking like ballistic. I mean like we just saw like some like mostly continuations like Asia, like it just like kept like going up. There are just many volume imbalances here. I like to use like volume profile in this case, like like actually properly anchoring it, like seeing like how much activity is like in, I guess like traded like in a certain like price range, and just seeing here like one small example. I see the spike here. It could be like a key area of resistance, like saying like how just like how much resistance it is, and just like is the way how I think like and then compare it to like how like strong like the buyer's intentions are in this case. And here it tapped here, it like hadn't like didn't have like that much trouble just like breezing past that. Here I was just like being degenerate, just like staying like up all night, just looking at like order flow like on my bookmap levels, seeing how price was like moving, because there was like quite a bit of volatility in like those past few days. But notice that there are also news as well, like I guess in this case like job or like economic like reports. So knowing that is like also like a very like important, I think it like for PST like released like right around like 5:30, like these like data wicks, like I think it was this, yeah, like no, I think it was maybe this actually, but it didn't leave like key like data wick like highs and lows. And like a little tip would be price is more drawn to like those like wicks, like just like those data wicks, like from news, like from in this case, like from news, like from like just like the jobs in general. So starting the day, saw market open, it quickly swept to this data wick high. And after it swept that data wick high, I looked all the way back, saw this, swept this key high, which it didn't break through like in the first place for previous like left just like that key liquidity like zone. Had this key area, seeing this low, just like low volume node like imbalance, and I can better visualize it here, like above, like seeing just like low activity in general. If I could like anchor it properly, like not much activity. Usually, price like would tend to either fill or bounce away from the key area, which in this case would be, or like you guys would know it as like a fair value gap, like in a way, just having that better like visualization, like knowing which like fair value gaps are validated or invalid. And didn't really see anything above. I think on like ES, like
No, it's all good.
yeah, I mean, like going all the way back, like seeing it quickly like
I
swaps
think so.
like this, like, just like this high, leaving like this like just data wick low, which price like in my opinion just like 90% like the times like comes down to like take it.
Yeah, I can text my mom. She's on it.
And seeing like price just like also leave like these like key like liquidity like draws like behind as well, like seemingly on purpose like last time, which also like made me think like price is more driven to those areas. And also like here as
I
well
texted
for
her,
like a third
so
time,
she'll
seeing that
respond
like
quick. Yeah.
I'd want to see like more bearish movement, but admittedly like when TP was here, I didn't like fucking
Okay.
expect like NQ
Yeah.
to just like rug pull, I guess, like 1.4k
Yeah.
points in like a day.
Okay.
Crazy, but this is my trade entry. I think my stops were at like previous like highs-ish, like just like giving it like space. There might have been like also like a slight SMT on ES as well. Like if we look all the way back.
All right. Sounds good. Thank you.
Scaling here. Actually, it doesn't seem. Actually, there was an SMT, I'm pretty sure, but since I use like SMTs as like a more key draw, like oh, like one asset like already swept like this, like I don't want like the other asset to like further like continue like sweep, then we see like downtrends like instead of like how people usually like use it. But seeing this data wick low, seeing that like I expected price to move down, but like looking at just order flow on bookmap in general, like I knew eventually like I'd be drawn to this like data wick lows, but for me like I saw something just like insane, like felt insane, just very insanely off, just something that's like pretty like difficult to I guess like say, but had a feeling like price wouldn't just like do like one last retracement like back up before like actually like getting those data wick lows, because just like my thought process is just like, oh, like the algorithm, like people, there's like lots of people expecting like this sweep from this data wick low, and like seeing how like price is like moving like quite oddly from options, no, not options, just like near like this like general area, just kind of stalling, made me think like we'd want like to like a further like true like sweep like above, and we see like just a clean continuation all the way to the downside, which I was able to doing a very risky play like scalp longs here, but I'd put my like stops up pretty like tightly at that like data wick, this like just one key drawn liquidity, but I was able to scalp this full TP like I mean I didn't have like a set TP. I eventually took profits on the second like leg up, since I also do like to use like OT for like the fib for optimal trade entry, and if we like draw it, it perfectly to like tap like the 0.709. So I sold there and I instantly just like inverted like shorts as well, targeting those previous data wick lows. It's like almost like a nice like ping pong bounce. I think I even posted it like on this chat or like some time ago. Maybe like Saucy like remembers on that day. I'm not sure.
Probably.
But I mean, just like to my like what I think like people like when I expect that like options would be like cheap as well, so it wouldn't be like that like just like a bad shot like either. And I think I was able. Let me try to find it actually. I'm pretty fairly certain I did post in this chat. Give me 1 second so we get that example. This is 20. Yeah, 6:15. Now post in the event chat, like, where would it? I think this was it. Should be the correct screenshot, but I think I was able to get like almost like a 100% play on that scalp up, since it was just like pretty cheap, and like the risk to like reward in my opinion like wouldn't be like that bad to like just like give it a shot, and it paid off like fairly well. Took profits on the second leg up, tapped like the 0.79 perfectly. I immediately like inverse like shorts, then targeting like those static wick lows. I probably should have just left a runner, but I mean, I guess that day I just decided to like follow my rules and just not trade, and just like missed out on like fuck like all of this. But any questions, I guess?
How do you know where to place the bottom and the top of the fib for the OTDE?
Let's see. In this case, like, since I'm looking for shorts, anchor it to like the last like two moves in this case were shorts. Since like price initially falls from this high, here like it recovers, you'd want like to see like usually just like find or like have like price that just like reacts down to like certain like key levels, and for me like 0.79 is like the max like discount, like the best like entry you can like get. So I'd anchor it to this specific wick that like did like the initial, that's like currently doing the initial like move like up in this case, like anchor it, just anchoring it here. If we like also like scale down, let me like turn replay, like in the 5 minute, like you could also like anchor it from the move, like initially like move down to like the move up in this case, and it'd also like pretty fairly like respect like 0.79, but since I'm trying to like get a more like accurate like entry, like in this case, like I didn't like draw like multiple like fibs together to like see just like what lines up, and as well using like bookmap as like a confluence to like see like actually like visualize like the levels, like just like the levels. I was on ES, but I mean if we were like to go here, like we should see price being fairly respected. Like draw this. Oh, let's anchor it to exactly that. Like here I saw price like reject like pretty heavily near like that 0.79 level, and I looked on bookmap. I saw also like more like it's just of like a visual, seeing like, oh, like price is like very much like respecting this. Like we are going to see like downside, buyers is like dying out. This is like just all manipulation up from like my last play, and we just see like downturn, enter like near 0.709. I did do like a market orders, like so I probably just got like a worse fill, but like OT is like one of my favorites, like simplest, like easiest to like to understand like models to like get like a more optimized entry.
So you placed the OTE whenever you saw a rejection.
I place like
Was
the
that
OTE when I'm like expecting like a, or like anticipating like a move in a certain direction. So in this case, like if we, let's see if I can cut this replay even more. I guess like in this case, like here, like saw price, like I saw price like initially like reject, like fall down. Like, okay, yeah, like this is definitely shorts. Like I'd wait for like a retracement back up to like get like a better entry for a continuation down. Cause like I mean you could also just like see price like going down, you can also entry, but I mean like entering like up here, like if your TP is like all the way at like the previous like lows, like it's like almost like an AR, whether if you just like entered like randomly, like just like impatiently, like you just like chop your profits all the way down to like a 3.5, just like horrible in my opinion. And more just like effectively using like OTE, like your profits in the long run like will be very like very much more just you like I guess just save like so much money like along the way. It like really does add up.
What were the indicators that made anybody think that it was gonna hit the previous lows from like way back? Like
Previous like
what
here, like
like
all the way back here.
yes, bro.
Bro, like I'm gonna be fully honest, like I did not expect that in like the same day. Like I knew we were gonna revisit, but like I didn't expect like such like a fucking rug pull from NQ, like Jesus Christ.
Yeah, so like if you were to place like a reasonable trade, where would you have expected it to go? Because no one's gonna expect it to drop all
Like
the way to
for me, I
break,
just anchored at like this like key like low.
and that's in the same day. Okay, yeah,
Yeah,
you're on
just
one
like
minute
this
time.
like same day. This is my TP. Like I already made like substantial like amounts. I just like walked away from the charts. Then like regrettably I just like missed out on the rest of like mostly this fucking play. But I
Yo, and
mean,
then how do you know, like, when you're following a trend, like when it, for example, it's going down hella, like you're missing it versus like you're getting in too late or following it, if that makes sense.
like what do you mean by that? Like sorry, could you like
Like when you see price going down so much, like I feel like a lot of times, like whenever I'm entering, I'm kind of like scared of like seeing retracement, right? And
you'd
then
like you'd
going
wait for like the
negative, if that
retracement.
makes sense.
You
Okay.
like you'd wait for the retracement. If
My
price just
bad.
runs without you, like just let it run. Like
Yo,
having like good
Spiky, can I say
discipline.
something?
Yeah, what's up?
Can I say something?
Yeah, go on.
So honestly, that day was probably the best I've ever read the chart, right? So no one
Mm.
knew that it was gonna continue down like that. But one thing that I noticed was like, so it created a gap that morning, which we knew was going to be filled. We didn't know it was going to be filled that day. But my
Yeah.
biggest thing was as it was continuing down, I noticed that there was like previous fair value gaps that were being created, and I was waiting for like to see if there was going to be rejection off those fair value gaps. And each time it broke down, so that could be like an indication, being like, okay, it's going to continue down, and then every time it hit a certain fair value gap every time, and it just kept breaking through.
Yeah, like you just see like just massive sell off, like just like that like momentum like downwards. Like I just like walked away from the charts. I just like didn't look back once my TP hit. Like since I like to just chill for the day, but I mean just seeing price like that, like
Your best
you
friend is really
definitely
going
could. What
forward the 4 hour and looking back.
what'd you say, sir?
I said your best friend is really going on that 4 hour interval and looking at the previous highs
Yeah,
and
looking at
just
like higher time frames, like right, like like you'd have like a more broad, like there's like less noise, like seeing just seeing like trying to just like doing your like analysis since I'd surf with like higher time frames. It doesn't like really matter which I use like all type like sorts of like time frames since like I'd want like a more broad like grasp, which many people like don't do, but I use like all time frames as I can, like seeing what matches up, use hour hourly, just all sorts. I mean I don't fuck like uh the one like important thing is like the part that is like also like important is just mainly the 4 hour like opens and the 1 hour open candles, since those tend to be like either like key opens of certain sessions or like psychological like levels, which might like lead like the traders to react in like a certain way, as well as just like key levels at like I guess like 0, like 100, like 200, 300, like just like those psychological levels, like as well. And if you would like, if you do use bookmap, like you'd see like orders always at like those like levels as well. And,
What's bookmap?
bookmap. Bookmap. I use bookmap as a way to just better visualize like order flow. It's kind of like a heat map. You just see activity on like certain like key like levels.
yeah, I'd be
And
using option charts and cheddar flow for option flows.
yeah, just like using options like flows and just like whatever like is best for you, like whatever like you yourself like understand best. Like that's why like you'd like hear like different strategies like work like for other people. Like it's just
Yeah,
like people just understanding just like understanding it differently, and it just like in my opinion it just narrows down to like just the same concept in general. It's just how you like understand like the market, how you just I guess just like whatever is like easiest for you to understand, and not trying to like force like strategies or just like what other people use, because people like think differently, and knowing that like there's a very good chance like what works for someone would not work for the other person, or like you in this case. So just my like just the best advice I could give is just trying to understand it thoroughly, like why it works, why that works, like just like don't think like just indicators, I guess like ICT in this case, like that's just some strategy, like oh like it's just simply this, like there's like nothing it like deeper like into it than just like the indicator, like because all key like just like indicators like they have like different like just aspects to it for you. Like if I could get a good example here, like go on the 4 hour, like maybe on like a different like time frame, like usually this would be period. Sorry, go on. What's up?
Yeah, I'm not even gonna lie. I use MACD support levels and resistance, and then like I think I was telling Saucy. I think like we were both looking at it, and it was hitting like 667.5, and it wasn't breaking a certain high that it made that day. And then on the MACD, it was also showing like buyer momentum like slowly going out, but yet it was still going up. Like it was still trending up, but yet the volume was not matching. So that's another indication that like our buyers are getting tired and sellers are starting to take over. And then after that, like the second rejection off that, the
Yeah.
667.42 or something, it had that really big downward candle, and then it just went to shit after that.
Yeah, that's true. Like, here's like a thing, like, it's like pretty important to know as well. Like, most indicators, like, you guys see them as like RSI, RVI, or like MACD. It's like delayed as well. Like, the info is delayed. It's like it's calculated. Like, it's pretty like delayed. So if you were to use it, you'd have to like, I guess like quote unquote like predict it in a way, since the data that's being processed, like, it's not accurate to like the current time. Like, it's all delayed. But good example actually, like I'm using MACD to just like see like how strong buyers and sellers are as well. I guess like RSI and for me like I use I guess like CVD like on my option like bookmap in this case, like which is kind of like volume like delta. I'm just like able to see like more in real time like how strong like buyers are, like how if they're just like blowing off steam, if they're like slowly dying off, like it's all like the same thing. Just
You
like
can just press it. You don't have to check your phone.
it's going like it's all the same. It's just like what like you read best. Like if you read like the MACD indicator like better, like good, like that's good for you. Like and if you do read like I guess like CVD, like that's good for you as well. Like knowing that like it just mostly like goes to the mostly like the same just practice, I suppose. Like which is should be like a pretty good example. If we go here, like if I can work this out, like just for
He's like a
example.
celebrity, so he likes all the missed calls and stuff.
Sorry, like a
Yo,
fair valley gap is what's up?
I can hear your mic, bro. Yeah.
Okay, sorry, but I mean, some of you guys know what a fair valley gap is. I'll show like one of my examples here. Like, just like in practice, like you wouldn't really expect like this to like really be like a fair valley gap, which like to be fair, like on different time frames, it could appear like way different. But using like volume profile here, I'm better able to like visualize like what would be like a fair valley gap on like different like time frames. Like would be like
So
pretty good.
for fair value gaps, what time frames would like you respect the most?
Like usually a higher time frame or bias usually gets respected way more. Usually for example, like this to you wouldn't look like a fair valley gap. But I guess like on like the day, like it was perfect actually. Like you'd see it as a fair valley gap in this case. Like by definition, that is a fair valley gap. But if we like go down to like lower time frames, like it's like kind of like iffy, like kind of choppy. and just like on the 1 hour, you wouldn't like really like consider that like a fair value gap at all. But using like volume like a profile here, like by definition, like if you for like the few of you that like actually understands what a fair value gap is, like how it works, like
Oh my
just like the
god.
more like technicals to it, like you
14
would pretty
kills,
like
not
have an
bad.
easier time to like understand like this would like be also quote unquote like considered as a fair value gap, because for me, like how I look at it,
Yeah,
it's
I mean,
more
the
of
guns I
like
was
a
using were
language
kind of
than like a
goated, but yeah,
strategy to
I was
use, which
sniping
like
like
also just
crazy,
goes
bro. I
back
did
like
not miss a shot with the
understanding like
sniper.
how it works, why it works, like
No, I wish
just
I
seeing
wish it
like
did.
by definition
Jay,
like value
hey,
gap, it's
bro,
just like a lack of
we can
like
hear your
value
mic too,
balance.
twin. I have a question. What you mentioned the purple and not purple, the pink and blue thing. What is it again? And what does it do?
Pink and blue thing. This one.
Yep. Yep.
It's a volume profile, and you don't have to use it, but I really like to use it to see just like activity like happening like at like certain like levels for each like price. And if we see here like for like this point of like control, like the most like activity, like you could use it as like a key like resistance or like uh breakout for getting like better like entries. Price usually tends to be more drawn to like volume imbalances, like balancing like those like things out. So I'd also like use like I guess like low volume nodes as a way to just match up like with like how I'm like thinking, seeing like
A
understanding
fair
like how this works. What's up?
a fair value gap is usually found at less volume because that's where you highlighted it.
If you know how a fair value gap like works, like
Well, it's whenever there's a
what's
I
up?
thought it was whenever there's a big change in vol or volume, no?
Fair value gap is usually when like price just like moves like up like pretty like substantially, and it leaves like just like low activity in like that area, which like price tends to like revisit like those areas like later on to balance like I guess like just balance it out in this case. Like if we see here like or this fixed like line profile range, like from like just like this like area in general, just like very low activity in like the lower volume nodes, like price just moves like I guess like too quickly, and for like low
Fair
like
value
balance
gaps
areas.
also we also usually like break structure most of the time.
What's
So
up?
you want to look for a break of structure whenever you see a fair value gap.
Sorry, could you repeat that?
I said that whenever there's a fair value gap, it usually breaks structure as well. So like you want to watch for a break of structure.
Like I mean that's also like another thing in itself. Like
Yeah.
it's more like I would rather like people just use it like as like a language, and just more like using it to like understand like what the market is doing. And if you can, the better you can understand the market is doing, the better you can like understand like what it wants to do, like just flowing with the market, like just moving like with like the market, like
So fair value gap is kind of whenever a stock's price goes up kind of where it shouldn't, and it's basically indicating that it's gonna revisit that price or lower or higher or whatever.
it's not like guarantee, it's just like price like tends to do that, like it's more driven to do that. And it's just like all like you just like pair like multiple confluences, like see if it
Yeah,
like
it's just
aligns, like just see like the probability, because in the end it just like goes like just like goes down to like just probability. That's all it is, in my opinion. And pairing it like together, just like understanding that like you can just have like just a way better read of what the market like wants to do. Does anyone else have any questions?
Can you sing us a lullaby, bro? I could fall asleep to your voice.
I don't do those anymore.
I got a question.
Yeah, what's up?
How do you build your bias for today?
Bias?
Yeah, it's gonna be
Usually,
bullish or bearish or bearish.
bias, like for my bias, like just like seeing like what happens like in the past and just like my experience, just like analyzing like what price has like been doing like for like the past few days, like seeing just key like areas, just key draws on like liquidity. As once again, like the market is more like it tends to just be more attracted to, I guess, like just good discounts, like liquidity areas, moving like with like efficiency. And going back to that, like we see here, like seeing here, there's not really that much. Like we see like this volume imbalance, like obviously like better like visualize like going on like higher time frames, like just see like this like low volume node, like volume imbalance. It did create a gap, which usually price does tend to like tap and like fill, just like play in these gaps. So that was like just like the last leg down, and I was able to like get like a pretty decent like scalp long, uh, like right about. I'm not sure actually, but
I would say
what's up?
build your bias off of the how the week's moving too, like today, Monday specifically, right? Everything jumped up, like Tesla and all of the stocks jumped up and they consolidated at the top and they ended green for the day. I would see how it moves tomorrow, and if it continues upwards, then you probably would think the bias for the week is going to be um, bullish because people are going to be holding contracts until Friday, and then
Yeah.
it's just going to push the price up even more. And then usually on Friday around like noon, stuff like that, that's when you'll see people sell off, and that's when you see like a big drop in price also.
Yeah. And like that is like one example, like just like a nice way to like look at it. And if you're able to just like see like the more broad picture, like the more you see, like the more you can understand, which also plays in like the more you'd be able to have higher probability, more confident like trades, in my opinion. Like if you want to hear just like my like uh just like my outlook, like I do want to see like be like see, like even though it's like a bullish, like I do want to see like bearish like trends like from this point on. Like it might even tap like just a region deeper for like these like imbalances for like a nicer premium would match with like my properly anchored like certain deviation levels right here. Like just using these together like and properly just like having like entering like a reversal like I like yeah, I'm very much like anticipating just very like a very bearish like month in my opinion. So also like you could even like use like OT like all the way up here if you like really wanted for like 0.79, and it's like pretty effective as well. And seeing it like also lines up
Oh,
with like
sorry.
these imbalance like previous like volume imbalances. Like also matches like my like 4 like standard deviation near 4.5. If I drag like fib like somewhere like here to here, like just like in the volume imbalances, like just reaching in deep, just deeper until we see like just a bearish like trend, in my opinion. So even though it's bullish, like that's how I just mostly like find my like bias, whether like the continuation would be bullish or bearish, and scaling down to like see like just like having like more confirmations, like scaling down to like a lower time frame, like having more confirmations that like a trade is like wants to like go there, like just better like conviction that like let's say in this case like prices like wants to be bearish. They gotta look for like key like just like things like that would like stand out, that would more confirm the move in like a high probability setting.
What are your top 3 confluences that you look for whenever entering a trade?
I love Fibonacci, like OTE. I really like those. And I guess like bookmap to more accurately like have an entry on just that in general. Like I really like using like the fib, like just using as well. I guess like more. I guess like hard things. I guess like I do like to use just time in general because my theory is just that like price can be very manipulated, but like you can manipulate like just so much until like you just can't like in the end like the only thing you can't like truly manipulate is time, and time like will like show you like the true like just like the true like end, just like the end goal, I guess, you know. Use time, I use fib. I guess like I use more like more math based like just confluences that just like proven theories, I suppose. I like just using those just laws, I guess. Fuck, like I'd just say like laws of nature, like however, like just like the best way for you guys to understand it. Like knowing these, like it's like more, I guess, like for me, like a forever model. Like it always work for me, like in what I do, and like and just like when market like conditions like change as well, like it would follow like those like just like my like models and concepts as well, as market conditions like tend to change like very much. And the thing is with like some traders, like they can be consistent for like years, but as conditions change, like being like unable to like to adapt like to those like changes, like they could very easily just like fall off. So I guess mine is more of a forever model, and just being like able to like adapt, like the better you can adapt, like the better you will thrive in the long run, showing consistency. That's just how I see it, in my opinion, though. Anyone have any other questions?
So this can be used on like any stock.
Uh, Relatively, yeah. Like given like there's like enough volatility, like you can. I guess you can also use like trend lines, breakouts, just like the basics, and just like those stocks in general. Like it should like follow. It's just like it should just follow like price action. Just understand like how like price is like reacting. Like just knowing that. So
I know we're probably gonna go over this in a separate day of the class, but how do you know where to place the fib?
uh, so
You
since
got like 4 of them.
I
You know what I'm
yeah like
looking at?
okay, let me clear this real quick. Since I am expecting like a continuation like downwards or like a bearish, like I would draw like this fib from the last like I guess like the last high to the last like move, like the very like lowest like move like up, like the retracement like up for continuation like momentum like bearish. And so in this case like I would be bearish, so price tends to, for me, like 0.705, like it's like just like a sweet zone. And usually like price like would just trade mostly in this like premium. Just I guess putting it simply, like the higher you get, like the higher probability like the trade is going to like more so like reverse in your favor, and And for me, like from my experience, like price like having and just like respecting this like 0.7 like a 79 level like perfectly like almost like always to like the tick like is very like nice in my opinion. I use that as an entry, and I also do like pair it with bookmap to like find like a way more accurate like entry in levels. So that's why like, I'm able to like get consistently like perfect like top or bottom ticks for certain like entries.
So let's say for some reason you wanted to enter right before those big giant, like those four big bullish candles happened, right?
Like here,
Yeah, so would you always place it at that high and that, or like is it always previous high? And
like
let's
here.
say price is at that low right there. Let's say
Yes, like yeah, like sorry, go on.
let's say where that zero is, price is like, or well, the zero's gone now. Yeah, like let's say price is there right now. It
Mm.
hasn't done that big bull run yet. You would still place it at that high and at the current price of the stock, or would you
Here's
look
like
for
the
a
thing. Like
low?
here's the
Right.
thing. Like yeah, sorry, go on.
No,
Like
that
I
was
would
it.
yeah, I would only draw it when I'm like just like more like towards like the end, like when like I want to see like hey like I want price to like move. But since like right here, like I don't like expect like price to really have any like downturn. Like yeah, like I like here like I thought like would be like more bearish. Like still, I see like some up like have some like activity yeah, like up there just in general. Like I wouldn't like really draw like the fib since like I'm not like really looking for an entry. And in my opinion, like shorts here is like it's just like a low prob. Like I've never like enter like shorts like here, so I wouldn't like draw like the fib in that case.
So what's the difference in when you using the three entry fib on if you want to either short or long something?
3 entry fib. Like sorry, could you like
The one with the point 705 and the 0.79 and like one the 1 to 0.
like what about it?
Like if you wanted to re-enter on a bullish trend, what's the difference between a bullish and a bearish at re-entry?
Like I guess for a bullish entry, let me try to find a good example. Is there really anything? I mean, just like in practice, it'd be like the opposite. Given
Sorry
the
for the Fibonacci scale and everything. Like, doesn't matter like which time frame and which high, like which previous high and like previous low they use.
previous high, like for the time frames, like just like the activity, just like the whole, like just more like the broad aspects like happening like in general. Like I would only like for me like when I use a fib, like it'd be like one of like more just like scaling down, like finding just like beginning to like find like a more accurate entry. But like if I want to see like continuation longs, which in this case like I wouldn't like trade at all, like my like max like safest like discount for an entry would be like the 0.709, which would be like reverse in
Oh
this
yeah,
case. But I'd also
sorry,
pair
man.
it with like
I
other
didn't really
candles.
get it before, but like,
Yeah.
what exactly are the numbers supposed to mean when you're like drawing this the Fibonacci scale?
Okay, like the numbers are just basically like the like I guess percentages in this case, like from like this drawn like 0 to like 1. So zero point 0.5 would just be like 50% of like that box. And like here like 0.779 like and like trade like max like 0.79 in this case. But you can also like use it in many ways. Just like see like the grasp of like how price is also like moving in general. Like seeing like which levels are like being consistently like respected. Like seeing how just like seeing like how like bearish or just bullish like prices are just moving, whether it be just going up in like low liquid like resistance like liquidity, just like how the market flow is doing in general, just like a certain like direction, like I guess putting it simply, just like the speed, like or just like how like how fast like a price is like going to like just like going in like a certain direction in general, compared to like the time it's like taking. So if we like, I mean, if we see here like we see like a more like we see price like have like a way more obviously bullish, like that's like the more general like direction. But if we see here like price is like still moving up, but it's like moving up like at like a more, I guess, slow like exponential like rate. Like if we
Okay.
see here, like if we draw like this 0.709, like we shouldn't have like a significant like reaction, whether it be whether it be like drawn. And if I do look on bookmap, like I still like see like draws like lower, so we might like dig like a even like lower, but like seeing it tap like a certain like level, like and just like seeing like the reaction like hitting like a certain level, like just like tells me like the more broad like what like how the market is, what the market is doing. So
Got another question. Can you guys hear me or no?
yeah.
Um, so you said like we kind of need like information like trends or like volatility in a stock. So like if we kind of don't have that or we don't see it for like a couple of days in a stock or it's like hard to find, would you recommend just like not trading that overall then?
Just like I mean, okay, like
Like for example, I was looking at like Meta just because like someone was asking about it and I found it like hard to like find a level and it was like from the middle of the day from the previous
the
chart.
final level, like would you like want to like see?
I just wanted to see like how to use like the fib. I was just like trying to practice on different stocks and then it
Oh,
was
like
just
for
like
meta, like
hard to find. Yeah.
I guess like for if I could find like a clean just PA here. Hmm. But looking at meta, like maybe even low volume node, not just like show you how like I'll do my analysis. Obvious, I'd like properly like anchor it to like certain like key like session opens and like levels like overlapping. But lots of activity like happening in this area. Scale down like to like the scale out to the 4 hour, and we see like this significant like just like volume balance like right here. Like we might just like I guess right here. If we also go a bit back, like yeah, we also see the same. So like I'd like to see like price like tap into that. Then I'd also see like other like key like just like see like this like key like liquidity like draw on liquidity, like it also like like aligns and matches with like the low volume like node like imbalance as well. So I'm thinking like it might like tap and like sweep it. And I guess like if we also draw like standard deviation, like I'm still trying like it also like it's nearing like the 2.5 like area, I guess. But I also do draw like a certain deviation like different time frames to get like a more, I guess, like accurate like just an accurate like area in general. Since it could be like the manipulation could be like very different on like you can see it like pretty differently on certain time frames.
Do you like using like the standard deviation or like OTE? Or do you just like use both whenever it's like
Just both. I just love using like fib, just fib in general. Like yeah, like I just really like do like that, I suppose.
Wait, is fib like your main strategy or
It's like one of my strategies which I pair like in confluence with many like others as well.
He basically trades the same as me.
Yeah, I think so. Yeah, going back to meta, like I mean, I also like use like previous like session high lows, which could be like key draws as well. Seeing how it is, but I'd have to like mark like the previous like. I don't really trade. I mean, I guess like I trade in like the more broad market in general, which I like to like see more like consistency in. But for meta, like I'd still like to see just this tap and just like we see like downside. But obviously, I'd look for more confirmations. Like, and if we like scale like down even more, you could maybe like just maybe like draw this like fib maybe. Like I wouldn't like it just like depends like if I like see like if a fib is like gonna be like valid or not. And just like knowing like what stock you're trading as well, just like getting used to it. Like seeing this downturn like previously, like the last like respected area was like I guess like 0.79 in this case. So seeing that like significant like jump, like I'm leaning more like towards in like in this area, like it may like want to reach like even like deeper, like especially for this I guess like fair value gap you would call it as. And I'd try to see like more just like downturn like once it hit like these like levels and just like lining it all up together like trying to do that like I find it like very like effective and gives me like high probability like trades. So any questions?
Just to go back, like just ask the question. I was like doing something for like the first literally like 45 minutes of the stream, so it was kind of hard to like listen and stuff. But
Mm.
so for standard deviation, should we just use that at like market open, or is there like a certain time limit? Sorry, I know
Usually
that's like a
you
super
draw
like repetitive, easy
no
question,
like
but
not at all. Usually you draw like the standard deviation on the manipulation leg down of like the leg you like think is like price is like manipulating in, and just like what you think is like manipulation. So in this case, like we see here, uh, like I'd like to see this as just like obviously just sell off like manipulation down to this like gap, like pairing it just like gap drawing like a certain deviation. If I can not be retired for a second, like drawing this like all the way to this even, and we'll see here. Although it just like it can be accurate, but it just like depends how you're drawing it. So like even like right now, I'm like still like making just like trying to like develop my own like indicator to like find like the true manipulation leg too, so I can like get like the true like average. So in turn, I'd get like more accurate like reads in this case. Just like seeing like the average like ATR, just like the average like true range in this session, and like then the initial like manipulation down, like accounting for all of that, just like more I guess like quantitative like based like theories, like but even like knowing that like I'd expect like the true like manipulation like would be like I don't know like right around like in this area, and I'm just trying to like calculate and like just like see like how like better accurately I can like do that, since like using standard deviations like the like hard part, just like the biggest issue is just like properly like accurately just anchoring that level. So
is it because it's like always updating and stuff, or like it could always be like seen differently?
just like because you're just drawing it from like the candle wick like manipulation down, and like either the minute like just like the side like it's manipulating in. So like on like I mean on the 5 minute here, like we could see like this could be like the manipulation down, but like if we like look at like it's like 15 or like 3, like some people couldn't like even say like this could be like the manipulation like down as well. And if on like the 1 minute, like the manipulation like down could be like very like even like this as well, since like it's just like you're drawing it like on candlesticks instead of like more. And just for me, like what I'm trying to like find is just like more backed, or just a stronger like just support to like draw like anchor it on. So like I'm just
Thank
like
you.
doing that research and that theory, but if you're able to like properly draw like standard deviation, like it'd be pretty good.
I know you just kind of like tried to explain how to draw it, but like I'm gonna ask a similar question to what I asked earlier. So like
Yeah, go on.
you see where it's right next to the one, like go back, wait. It's right next to the one
Yeah.
right there where it drops off. Wait, oh,
Yeah.
where'd it go?
This?
Yeah, where so like let's say price is at that high right below the 1.5.
Yeah.
So none of that after it has happened yet. How do you know where to draw the fib? Because you don't
I
like
already like drew it like all the way back like on this initial manipulation leg, since I am expecting like upside. The main like levels I use is like 2.5 for like stagnant like just like areas just like stalling that price, maybe reversing or
that's
like
what you're expecting it to get to 2.5.
yeah, it would be like a fair like price in that like area, and I'd pair it with like a lot of like other confluences as well.
Okay, thank you.
Yeah. And just like seeing like how like the just like these like key like levels just like act like just in general, like from my own pattern, like just like my experience, like I like to like determine what
So you
is
said
going
it
to
was
happen.
hard to kind of get those anchor points. Would you say like making the fib just overall bigger, is that like more of like a like I
Yeah.
don't really know, like safer strategy, or would you say like having it like with those wicks, like what would you recommend? Like how big do we make the fib?
Like just standard deviation. I mean, like
Yeah,
it
for
just like
standard
comes down
deviation,
to
because
like
you said it was hard to get those anchors. So like, what would you just say like big like making the fib like 0 to 1 anchor bigger or smaller or like
just like I mean, like just like a kind of like a simple fix would be just going through like multiple like time frames, like drawing like each like average like manipulation leg, like what you think is like the true like manipulation leg down. Down this case, because like some people like since around the 2 minute they might draw that, they might think that is like the true manipulation leg. Going like 3 minutes, like either like even like this or this, like you draw like the manipulation leg, like
so it's
here,
even
like just
like
like
similar to like when you're checking like fair value gaps in different time frames and stuff and seeing if like those are still like respected on lower time frames and stuff like that. Just like referencing different time frames over and over.
yeah, just like seeing like what aligns like the most, like which like just like the best advice I could give. Like even now, like I'm just still trying to like calculate or just like more like a mathematical way to play into the fib. So.
No, yeah, that makes sense. Thank you.
Mhm. Does anyone else have any other questions? Any questions, comments? Uh, just like broad and like general questions that you might be curious about. Could like even be off topic. So.
So this might be like a dumb question because I could probably just like look this up in a TikTok video or something, but like manipulation, is that just like when the price like jumps up or down? So when you like talk about
Uh,
like manipulation like anchors or manipulation like candles, I guess.
I
more
got a
like
question.
manipulation. Yeah, go on.
It might be a little personal, so you could not answer.
Like ask away.
How profitable are you?
Relatively profitable, I'd like to say, because like for me, like what I believe, like the difference between like your first like 100K month, like 10K month, like 1K month, like making all of that, it's like the line between that is a very, very like just not far off, and the only thing that's stopping you is your psychology. Like if you can consistently like make like even like 1K a month, you can like you're not even that far off from making like 100K a month. So that is like my concept in general. of what I like to think.
I saw like a chat from Chris as well. We were wondering about the manipulation whenever you can get to it. Just like kind of explaining it, I guess, because I know it's a simple question that we could totally just look up, but we're here. So it does like, what does that mean, like manipulation to you guys?
Just like the fake move, like what the algo is just trying to like fake people out, go over the AMD. That's like a perfect model actually. But before we get into that, just like what I usually determine to be manipulation is just like what the algorithms are just like sending orders in, just like driving price in like a direction, which is like should not be, just shouldn't be like that. Like that's not like the true value. Like it's like inflated or like undervalued. Like
Like it just makes that jump in there, like price just like logically shouldn't have gone that way, kind of thing, or
yeah, like like whatever sounds like what, like just like determining like if you're able to like determine like manipulation, like, and it's mostly like just experience, in my opinion, just experiencing how like you just like kind of grasp at it. It's like more difficult to explain in my opinion. It's like something like you see in the charts.
it's
Get
just
that
like something
experience.
you recognize like with experience.
Yeah. It's like how I see it mostly. So
Thank you.
go over AMD model. I do like AMD as well, although I do like a slightly different like spin off of it. Like from what I have back tested for what like works for me, since I don't fully like do it one-on-one. So the theory just like goes over just it's just a session, like it accumulates, like meaning price usually just like stays in like a certain area. Like I guess like in this case it's just like accumulating like here. If I can find a better example, that'd be very nice.
I had another quick question, Spikey.
Yeah, go on.
Is there like a stock that you should say that we should just keep practicing our fibs on, or would you say just practice on like things? Because like usually my most profitable trades have come from like Nvidia and SPY, but like I'm not sure if I
Uh,
should try something else or just should I keep practicing with those and just understand their price actions and like
Me
movements.
personally, I like trading NQ like on the Nasdaq, like the more broad market. Like that would be like QQQ in like options terms. I guess like SPY would also be like ES as well. You could also practice on both. These two usually move in like uh just like move like together in like more of like, I guess, usually like a 90% like give or take like ratio accuracy. Like
Are the like contracts more expensive though, or would you just say like just practicing fibs? That's just for practicing fibs.
just practicing like price action in general, like just better understanding. And that's why like I went to like learn futures. Like took a break from the server to learn futures, came back, and recently started doing options again. So
Okay, yeah, thank you.
yeah. Oh yeah, AMD. I mean, just theory models. More commonly just the theory of price like accumulating. Like I guess a tier like accumulates here, like it moves in like a pretty fixed range. Then we should just say like C, like the next session would be like the manipulation like down. In this case, like it's drawing like the fib, I suppose. Like seeing like how it would align. I'd have to like more accurately like draw this fib if I wanted to like have like a more accurate read. But the manipulation usually it manipulates into like a key like area, which in this case would be sweeping like this like key liquidity like point, which would be like previous like New York open. or just like previous like New York like AM like liquidity sweeps that and manipulates into that, then distribution like I'd like to see just distribution usually in the opposite direction. Just like the very like simple basic theories of AMD. I do often use that like model as well, like whenever I spot it. I'm still like trying to like research like more deeply into that as well, since just like making my model, just like trying to like improve like my own model like as like on my own like just based around time as well. So
Um, when you're trading futures versus options, are you using like the same brokerage or like, for example, like options you're using Robinhood versus like futures, maybe using like a funded account or
yeah, like for futures I use prop firms, so and I do like I mean I could trade live, but I also would prefer like options. Trading like options, just trading live like on options more than futures because of
got you. And
just like
then
the
with
convexity.
options, where like are you trading on? Are you doing that through TradingView also? Or
I'm
you're
doing that
like doing it on
through my own broker, which I use Tasty Trade.
okay.
So uh
And then why do you use them for options if you don't mind me asking?
uh done like a bit of research. I just like they're convenient, just like how convenient it is, although the fees like are pretty high. I guess like also Tasty Trade, since like it's easier to just like scalp, like just go in and out, like having more information, like useful like information that I could use. That's what I like, I suppose.
And then I think I kind of had the same question as a Trend Blaster. But how do you like add those specific indicators under TradingView? I feel like I tried. For example, Bookmap, I felt like it was kind of hard to add for me. Like I wasn't able to do it.
Uh, Bookmap? What do you mean?
Your volume session indicators,
Yeah.
like on TradingView,
Uh-huh.
like could you go specifically kind of like where like the specific ad to so I could add it to?
Oh yeah, like I used like fixed range like volume profile. I could see like search that on TradingView. For like the fibs, like I mean I just created it like myself. Like I just configured it myself. If you want
Yeah, like the what's it called? The red and green.
the red and green.
Sorry,
Oh wait,
let me.
like this one? Like yeah, this is fixed
Yeah,
like range like volume profile. So
and you said right that's way more accurate than using RSI and the MACD.
no. Okay, like here's like the thing, it's just like whatever like you yourself like understand like the best. Like
Got you.
what like
Yeah,
cause
but regardless, you're kind of getting the information a little bit late.
yeah, just like how you perceive like the information.
Okay.
Any other questions? I mean, it's like as like a last thing, like if there's like just like any like thing like if you guys like don't understand like no stupid questions. Suppose like can like go back again better like explain it for you if you like didn't explain. Fib settings? Let me send my fib settings in chat actually.
Can you try to do an example on Spy?
Spy? 1 second. Let me send my fib settings. Shit. So I can configure them, but it should be like the same as Saucy's. Yeah, you guys can just DM me whenever. Yeah, I'll try to
I got a
check
quick
my message requests.
question, Spiky.
What's up?
So what time frames do you think would be the best ones to like what's it called so you don't get manipulated, I guess? 'Cause you know how like the 1 minute has like more you get manipulated easier.
Yeah, usually higher time frames, they give you like a more broad like.
So would you say like like Saucy does like the 4 hours and like the 5 minute? Do you have any
Yeah,
other
I
like
work like all of these like key levels, not like scale down.
okay.
So like just like scale down. I use like all like time frames, just to like get more like.
Did you get an outline from those time frames?
Yeah.
Alright, cool. Got you.
Like Spine and NQ, like it's like relatively the same thing. I mean, Spine, yes, it's like basically the same thing. What's going on? But like yeah, like those two are like pretty similar. They move pretty similar. I just like NQ because of the volatility more so. Let's see, just like the more you can just expect, just like a tip, I suppose, like just getting hands-on experience, just seeing like how the market is moving, like the better connection like you can like build and just understand like what the market is doing. Like I promise, like you would be like very much more like you would just like in turn just be very much more profitable, in my opinion.
So what times of like the day do you look to trade at?
Times of days. Depending on like the probably just like the market conditions. Usually I like to trade like New York session the most, which is like normally like market open. Since it has like the most like volatility, I don't usually trade like other sessions like.
Got you. And if you're not able to like make market open New York session, what would you suggest? Like
Sorry, what do you mean?
like for me, most of the days I'm not able to like make it to trade for market open New York session. So I kind of feel like I'm missing a lot of like actions and moves. Like what days or like what time would you suggest then during the day that would be like kind of the best time besides that, in your opinion?
I mean, like each like session like moves like differently. For you guys, I'd recommend just like watching a session, just like sticking to it, like studying, just like getting used to like how that like session is moving. Usually like the biggest move is just like New York. So, that's when like the biggest moves like happens. Like usually like near their start, if not like lunch like delivery. Like that's the two biggest
If
sessions.
we practice on a couple of charts and a couple of stocks and stuff, like can we send it to you and see if we made like the right anchor points and stuff outside of like the class
sure.
time and then like
Yeah, they can just
Okay.
like hit me up like whenever I can like get back and respond to you guys. I don't mind. Let's see. Yeah, just like don't be afraid to like asking questions. Like no stupid questions. Like
Could you do the Spy example, please?
spec example for just drawing the fib. I mean, I guess
Yeah.
here like it's relatively the same. It moves like relatively the same. If you'd want to expect like bearish momentum, you draw like this like fib right here, like from like the last like swing high to like the swing low that like retraces like all the way up there. Trying to get like that max
Where would
discount.
you enter right there? Like Would have been like a put or
It'd be like a put like near this, and if I like pair it with like way more confluences and seeing this like volume imbalance, since I mean, if you like do SPY, I'd recommend like charting on I guess also like ES instead, because ES is more just better than charting on SPY. But for SPY here, I'd maybe want to see it just like tap like pretty like deeply, like just I guess like at this key like volume imbalance, like scale down a bit. And I mean, I could draw like this like initial like manipulation with the 4. It should be like relatively like easy like draw. So seeing that like
So
0.25
the range
matches
from
lines
0 to
up.
1, the range from 0 to 1 is like the high and the low, and then you look at the like standard deviation from like manipulation.
Yes, like the manipulation in like the opposite direction then of like the opposite direction, then you see like you'd want to see like the continuations, then you use like these levels to like work out like potential like reversals. So like I'm like
Okay.
can like even enter like a high probability like put like just like right around this area as well. Like just like using more confluences, just like matching it out. But obviously like also like look on the order flow to get like a more optimized entry. So
All right, thank you. I had a lot of questions, but I got a jet, but thank you.
yeah, like no problems. You can just ask me like whenever. Like I don't mind. See. Is this the end of the options class? So let me type it. So basically, if it's resisting a certain level, that might go down and breaks a certain level. I guess it's supposed to be the end. I guess I will see you guys another day. I shouldn't have options class fairly soon, so.
Oh, Spiky.
What's up?
Uh, how much more time do we have? Is it done, right?
I suppose so. Like, I don't mind chilling for a bit.
Yeah, it's like I'm more confused. Like we're like drawing the fib, and like I know 2 and 2.5 is that your golden zone?
2 point.
No,
Just
no,
like for
like
standard
those
deviation.
numbers. Yeah.
Just
Oh,
yeah, I like 0.709 on the fib for like the best like discount.
okay. So you wait till it hit 0.79, and that's where you like kind of find
Yeah,
your
like
entry.
just relatively like yeah, something like that.
Okay.
So I like to see the most.
Spiky,
I
do you normally use both of the fibs for SPY?
Both fibs. I do like I just use it like just like whenever like it makes sense in my opinion.
It's like I'm confused. Like, how do you know how high do you wanna like draw your fib? I mean, that's like what's confusing me.
Just like I guess like because I use the fib like just whenever I'm nearing like just like trying to like close out like find like an entry. So I guess like going down. Actually, let's go in NQ so it's way better to visualize. Like here, like if I want to see like continuation for like bearish momentum, like that's like I see this just like rising, like I draw like this frame, fuck, like this last like swing high to this like swing low and see like what it taps and see like how to react from like a certain level as well.
Oh,
And you could
okay.
also use like
That makes sense. So you
yeah.
have the same fib settings like same as Saucy, right?
Like I'm pretty
Or
sure so.
like
Yeah, like should be the same.
okay.
Just like using the fib to like find like the best like entries or discounts is
Wait, yeah, that makes so much sense because like I see the wick between the 0.79 and 0.70 right there.
0.79. Yeah,
Like that one right there. Yeah, okay.
yeah. Just seeing how
Yeah.
it reacts from just certain key, like just like
Like you so like
like
in
using
the
key
point
levels.
seven
What's
75,
up?
you would have gone for a put.
I wouldn't have like I'd usually just wait like see like have more confluences. Plus, it's like Asia session. Like trading at Asia session is usually just like fucking death. Like no like volume, but for like all the other ones, like I mean, it's a good example. Like here, like continuation like longs, like seeing like hitting this like point like 799.
Yeah, so it did basically that's basically what they call golden zone, like you're like 7-9 and
Yeah, just using this, like seeing what aligns like previously as well, like be like pretty strong. And that I think I did
wait,
like
that makes
enter
so
like
much
the
sense.
longs. Yeah, I think I'm pretty sure like I did enter longs in one of these like continuation upwards. For me, like this was like insanely bullish. It's like so like I'd be like more surprised if it like hit like 0.79. So I can like just target like just the more sweet like golden zone like 0.705. See like what it matches like just with the trend. So I think that's why I got my initial longs entry. What's up?
Can I take a picture of your fib settings?
Yeah, I did send it in chat like all the way up here.
Oh, you did? Okay.
Yeah.
So on the one that you just draw right now, you would have got like into longs on the like the 0.75.
Like right here, like here.
Yeah, yeah, yeah.
This is
Since
where I
it's
think
like
I got like my initial
in
entry. I
that
think
mode.
like after like when the day opened.
Oh yeah, my bad, my bad. Yeah, I'm seeing. Yeah.
Yep. So I guess I pair it with like bookmap and it's like insanely broken for just consistently getting like top and bottom ticks.
All right, that makes so much sense. I have one more question. Let's say
Mhm.
the price just hit the like 0.79 and you said that you want to look for more like confluence. Like what are you looking for? Like volume?
I'm just looking for like just like the previous, I guess like volume profile. See like what activity like he like draws on liquidity and like resistances. Seeing like below if there's like anything below. So far like no, I mean we like left like these like here we kind of relatively like filled like the weekly gap. Draws like technically like kind of just only above, nothing like really like below here. And I still like just like my external like off like schizo theory matches as well. So just the more like I can like just align like the better like probability I can take these trades at. Since I
Okay.
prefer to like only take in high probability conditions.
All right, thank you.
No problem.
Spiky, one last question. I don't know if you mentioned it, but what like time ranges is it best like to trade like from like New York session?
For options, I mean, if you're doing like 0 TT, like it's usually like when market opens, like that first move. So like the theta, like just time decay doesn't just get you. So it's no, bookmap's just like a completely like different software I like paid for, like and use.
Can you show it by any chance or no?
Oh yeah, I can show bookmap. I'd be showing like the current market. Let me. I did screen share it earlier, but like I use bookmap. This is basically just bookmap. It's more of like a heat map, just seeing like activities. I also do have like I mean it's mostly on scalp mode right now, but I also like use like certain like deviation like anchored in every like just like a select time to like find like key like reversals and just like high probability like bottom ticks or like top ticks, just like perfect in general. See where price wants to lead. Just like a broader like more visualized like perspective in my opinion. So
All right, thanks, Mikey. See you later.
no problem. Have a good one. Should is this how kind of like kind of similar like I wouldn't doubt it if we like have like just like different like just like a different way of just looking at it or doing it since like everyone like does it like to each in their own like what works for them, but it should like kind of like relatively like be the same. Go over this. I mean, I wouldn't be able to like speak like exactly like how you get to the levels, but I mean, I can like do like relatively the same by just marking out like just key like draws on liquidity like and just like break out like support and like resistance like break out like areas of price like closes like above like a certain like point like I'd like to see like continuation like just like a breakout like upwards like past like that like quote unquote like support or like resistance in like zone. Which is like also like a just like another way to trade, which is pretty good as well. Yeah, no problem. Yeah, like Jesus Christ, bro. Went through like 2 whole like water bottles.